All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Uh, yeah, I have a chart up here, and this is a chart of the S&P. My apologies, I'm getting a little bit of volume feedback here. Let's see if that ends it. There we go. All right. Sorry about that. But I have a chart up here of the S&P 500 back in 2011. And, this was a very interesting period of time. It was one where we saw a steep drop here in July. The rest of the year had been fairly normal, kind of a sluggish growth period for the markets, but one where all eyes were on a singular issue. I'd equate it to the U.S. China trade war right now, right? Where that's the big eyeballs are all there. Yeah, there's all sorts of other underlying stories, but that's what this time period is going to be remembered for. Well, back here, this was Greek debt. This was the European Union. Is Greece going to default? Are they going to get booted out of the Union? What does that mean for Italy and Portugal and Spain? Right, that was the big deal, and it was all the headlines were about. Every up day was blamed on some sort of positive in that situation. Every down day, some sort of negative. And it almost became one of those where the headlines, if you went and looked at them, if the market was up, the headlines had something positive to say. Nothing really happened, but, the headlines were going, well, something good must be going on. And if the market was down, it was the opposite. And went through this period of August, September, where you kind of have to ask the question, is there a reason to buy? Is there a reason to buy? And yeah, the market had some big up days, had some big down days, and you can kind of just see how much chop there was through different levels. And it wasn't one of these things where, well, the market just went up the last 3 days, the bulls must be in charge, or the market just fell the last 3 days, the bears must be in charge. That type of logical thinking it was illogical, right? And it's one of those periods, and one that vivid recollections of it was, is there a reason to buy? And we were not, from a fund managing standpoint, we were not very heavily involved in the markets here in August and September. We had been very, very light. It had been kind of shaping up to be one of our more sluggish quarters, and ultimately it was one of our more sluggish quarters. Unfortunately, we didn't ride this down wave right here. We had caught the beginning, but we didn't continue to ride it. And then we started seeing all the chop, and we just were very, very light. And in fact, it was one of those where on this day right here, where the market dipped, my wife and my daughter and I, we took off to visit family in San Diego. And, I just said, to my brother, I'll be paying attention to things that are going on, but, you see something, go for it. And I start getting all these texts from him. I bought this. I bought that. I bought this. I bought that. And I was like, oh, okay, all right, well, great, fine. Why? He goes, well, we finally have a reason to buy. I said, oh. He goes, yeah, market broke into a new low. The last of the sellers are there, and you know what? All we're seeing is buy pressure. I said, great, go for it. And basically he put us in a very good spot, here at the beginning of October. But it's one of those questions, is there a reason to buy, that I think really matters in the current market that we are in right now. There are no new challenge triggers on the board, but I will go take a look at the challenge a little bit closer, because there's one that could be this afternoon in Verizon. But when we look at the overall market, and as I comb through it here this weekend, my question was, is there a reason to buy? With everything that's going on, with everything that has happened, is there a reason for the bulls to step in and be buyers in this market? And it's what I think is a very interesting question. And it's one where I think the answer is very simple, and one that ultimately will lead the market to new highs, but does nothing to put a floor into the market. You think about reasons to buy, right? A lot of companies, massive stock buybacks. Who's the biggest buyer of McDonald's stock? McDonald's, right? Debt is so cheap right now that they can go out, pay the debt, and use that money to buy stocks, buy shares. We've seen companies doing that for years. Is there a reason to continue for them to do it? Absolutely. What's happening to rates, right? I mean, here's just the 10-year. Here's the 10-year. I mean, it's free fall, right? I mean, it is absolute free fall. If we pull it up on a monthly, this is the cheapest it's been since, the Fed basically said, hey, we're going to start quantitative tightening. And, we are dealing with super ultra cheap rates. So, there's a reason to buy. Companies are buying, right? They're buying their own stock. They're going to improve their earnings per share by buying their own stock. They may not be able to improve it by the earnings, but they can improve it by buying shares of stock and making the number of shares smaller. And we see a lot of companies doing that. Second reason to be a buyer is there's no alternatives. Your fund manager, Tom, what are you going to go put your money in, right? Okay, you can only buy so much gold. You can only buy so much bonds at these levels, right? What are you going to put your money in? You got to put it in stocks, right? It's pretty much the only game in town. The Fed has made sure of that over the last 10 years. And, unless you want to diversify into some real estate and some other things that, you're not too familiar with, that your fund's not structured or set up for, well, you kind of have to be a buyer of stocks. This isn't one of those markets where you can say, well, I'm going to sell stocks and buy bonds, and I'm going to go and, let the fund ride on 1.5% interest. No, you can't do it. Can't do it. Back in the days where interest rates were 5-7%, sure. Even 3 to 5%, sure. Right? Because you could make a logical argument to say, hey, you know what? I have the money into bonds, make it 4%. Well, if we go and put it in the stock market, we expect annual appreciation here of about 5%. So we're looking at, about 1% better with stocks. Is that worth the risk? No. All right, we'll leave it in bonds, right? We don't have that right now. In fact, I believe the dividend rate on the S&P 500 is higher than, the Treasury yields right now, which is just mind-boggling in so many different ways. But there just aren't many good alternatives, right? If you say, well, I want to lighten my exposure on Apple, right? And you just want a little bit less Apple. You're a fund manager. What are you doing? You're selling your Apple. What do you have to go do? Well, you're going and you're buying some utilities, right? You're going and buying some AT&T, a dividend stock. You're paying for these types of companies, right? So there really aren't a lot of good alternatives outside of the stocks that are already in the stock market. Last but not least, what's the big incentive and reason to buy? Well, look at the incentives of those in power. And you've heard me make this argument over and over. But the incentives of those in power, U.S. President Trump, what's his incentive? Market higher. Chinese premier? Absolutely market higher. The Fed? Absolutely market higher. Right? Now, you could make an argument that the Fed may want the market lower because, well, if they have some political leanings, they want to see U.S. President Trump voted out. And they go, well, if we drive the markets down, then he'll get voted out, and blah. You can make that argument, but in all, Fed mandate, they're looking for market higher. And so you look at the major sources of power out there, and their incentives, for the most part, are to drive the market higher. Now, those are longer-term incentives, right? There's nothing about, hey, well, what if the market dips down here to 272 on the SPY, then rallies, right? They don't have to keep it sustained, maintained at new highs all the time, right? they can ride dips and then, help provide the catalyst for rips. And so when we look at the reasons to buy, they're all really good reasons. But none of them are reasons to look and say, well, there's an absolute floor in this market because they can't let it get down. No. Right? Stock buybacks, they're kind of over time. They're a consistent thing. You don't have a company looking and going, well, our stock just went down 1% today. We got to buy it up to get it back up. Right? They'll let market forces push it down and then be that buyer afterwards. Right? A lack of alternatives, well, that's been an argument for a while, and it's one of the big things, people are already in. We see that in the data. People are already in. It's not like, it's not like there's a huge amount of money waiting to get in, here in this market, which has been an argument in the past. And so as I look through the market over the weekend, I go, okay, these are some interesting reasons to be a buyer. And they're all very long-term reasons. Any short-term reasons to be a buyer? Any real short-term reason? No. In fact, the short-term reasons, you have seasonality going against you, right? So do you really want to step in aggressively in August after August has already started this way? And not only that, August, we're not even close to the lows. Do you really want to step in after this much volume dispersion? Do you really want to step in when the news cycle on the U.S.-China trade talks is strongly negative? You want to step in when it looks like there's going to be a hard Brexit in October? Do you want to step in when, right, and we can list off a whole bunch of other things in terms of the wall of worry. And that's what managers and money managers are wrestling with right now. The long-term incentives are the long-term reasons to buy are pretty good. They're really good. The short-term reasons, well, they're not very good. In fact, a lot of the short-term reasons are actually to sell. And that's the environment that we're in right now, right? And, so I fully expect, I fully expect some continued heavy chop, to come into this market. I do think there's a greater risk to the downside of coming to this 200-day moving average than what there has been. Ultimately, I do think the market gets there. And I think it'll be a really nice buy opportunity, right? It may exaggerate. We've seen that plenty of times. We could see a market that, has a 3-day sell-off and gets all the way here to 260, right? We've seen that type of action plenty of times. But ultimately, yes, the incentives are reasons to buy. Are stocks cheap enough for money managers to, want to up their exposure right here, right now? I don't think so. For the most part, I don't think so. Disney. We saw an analyst come out and talk about Disney this weekend, and they made a really valid point. They said this is the worst earnings reaction for Disney that Disney has had in a long time. It's been several years, right? And they talked about how much Disney has pulled back and basically said, hey, yes, the short-term earnings were disappointing. We talked about it last week. But the long-term thesis still remains intact. And they use this argument that, hey, with the Disney streaming service about to come online, there's a reason to buy Disney. It gives a reason. It gives a catalyst here for it. And I absolutely agree, in terms of, yeah, there's a reason. Now, can market forces, drive it and push it down a little further? Yeah, it sure can, right? But, as you're out there, as you're looking at different stocks, as you're looking at being a buyer or being a seller, ask yourself, is there a reason to be a buyer? Okay? I want to short McDonald's like no other. I have for 2 years. But every time I look at it, I can't. Why? Because, well, who's buying it? McDonald's is buying it. I can't step in front of that train. Just absolutely can't step in front of that big buying train. And there's been no sign that they're letting up. And I do think when they do let up, the stock will deflate pretty quickly. But it's been 2 years that I've been looking for an opportunity for that. Hasn't happened. right? Hasn't happened. So, as you look at things, as you look at various stocks and stuff in the market, there's some good values to be had. Like a Ford, the valuations are pretty nice. But is there a reason for money managers to step in and buy? Is there a really nice, compelling reason? Last week I talked about some of my favorite upside stocks, overall. Microsoft was one of them, simply because they have continued revenue growth. But even a Microsoft is not immune from, some more pullback with the market forces that are out there. So for me, I have a few small things out there, but very underexposed personally. And I'm really just kind of looking for a change in the market metrics, right? A shift to come in. And while last week we saw, 3 days where the bulls kind of, drove the market higher, so to speak, we didn't see the metrics change. They didn't drive them in a way that changed the metrics in any sort of significant way. Metrics like the bullish percent index, volume flows, any of that, we didn't see them change. And so it's one where, the environment going into today, a very similar environment, and one that I expect to kind of continue out there in the market. If we see bonds continue to rally, by bonds rally, I'm talking about the TLT. And if we continue to see this TLT rally, I believe there will be a fear moment, a really just absolute fear moment. The market basically saying, we don't know what this means. We don't know why it keeps going up. It doesn't make that much logical sense. And, a period where we can see the market, cascade pretty quickly, if we see bonds up into this real fear area. And I think they're getting close to that. What are we seeing today? Well, we're seeing the big laggards this morning, the banks, right? The banks are the big sellers here this morning, or the big underperformers here this morning, as bonds are pushing back up to, back up there to new highs, right? So bottom line is I go through things over the weekend, right? I see the reasons to buy. They're very evident. See the reasons not to buy right here in the short run. They're also very evident, right? And as we go through, and as I go through the technicals of a lot of charts, there's not a great signal, here with them. They're in these types of things like the XLF. Yeah, it had 2 bounce days last week, and then, a little down, and now today a little down. There's not a trend forming on these yet. Could they shift very quickly? Absolutely, they could, right? It wouldn't take too much to see that shift, but so far that hasn't happened, right? We saw kind of the 3-day drop Thursday, Friday, Monday, a little kind of late week pop last week, but in all, we're talking about most of these stocks just kind of in these absolute consolidation positions right as it sits at the moment. And that's a big reason why we don't see any challenge signals on the board. Now, speaking of challenge, Verizon. This is one that if it were the afternoon, would have a signal on it. Has a downside 3-7 crossover coming in on it. You can see a series of lower highs coming in on it. And as it sits, its consolidation risk is just a little too high, but is in a position to where this afternoon could easily trigger. We see a downside crossover on UPS here today, but is not signaling bearish. We didn't see it signal bullish on the upside crossover. We're not seeing it signal bearish on the downside crossover. We didn't see it signal bearish on this downside crossover. So, UPS a good example of just kind of being in that one of these periods of, down, up, and, no real trend moving to ATRs, out there at least so far. I'll pull up, see if there are any other crossovers that have emerged since I've jumped on video. But let's go see here real quick. This is scanning for upside, and it doesn't want to give me my pop-up here. Let's see here. See if I can fix that real quick. I may not be able to fix it too quickly here. I won't take much time. Let's go. Boom, boom, boom. Maybe. Sorry about this. Yeah, I'm not finding it too quickly here. Maybe it's, yep, block pop-ups. There we go. There we go. All right. That should fix it. Yeah, there we go. All right, so upside 3-7 crossovers for the watch list, blank, right? It's just blank right there, and then downside crossovers here for the watch list. You can see we have UPS and Verizon, and so still the same as they were. So nothing to be able to go jump into right at this moment. If we look at S&P futures, we can pull up a retracement here, and I'll show you this. This kind of caught my eye this weekend, and I'm going to retrace it from the Trump drop, right? From the Trump drop, and you can see the market last week as it came down to the lows and then bounced. It came right up into the 62% retracement area, that typical bounce area here for it. And so, does have that resistance to get through. If we talk about retracing on the downside of what last week's rally was, we're talking about 28.80 as the first retracement, 28.40 as the full retracement. So I do think that, somewhere in this area, this 28.40 area, becomes a very compelling place to possibly look to be a dip buyer. But those are a couple of the levels that the market's going to be paying attention to, going to be looking to come and play or come into play as we go forward throughout the week. Okay, this is an interesting week for the market in terms of what's on tap. If we come in to take a look at some like the economic data that's going to be coming, right? There's just not a lot that is critical, that is data where you look at and say, wow, this is really big, this is earth-shattering. It's very light. We do have inflation data tomorrow, which could get a little bit of a reaction, but outside of that, we don't have a lot of Fed speakers. It is very, very silent here this week from an economic data standpoint. And if we look from an earnings standpoint, you come in here to something like Estimize, we can see there's not a lot of earnings, right? Earnings season is pretty much over. We're going to have a few stragglers, right? We'll have JD here tomorrow, right? Okay, great. That's not market moving. Cisco, Macy's, here this week. We'll have Nvidia and Alibaba and Walmart on Thursday, which will garner some headlines. But, for the most part, earnings are done. The earnings season's over. John Deere here on, or Deere and Company now on Friday. But for the most part, earnings season is over. So not a lot of earnings or economic data for the market to kind of sink its teeth into. And so, what's the biggest news source? Well, probably U.S. President Trump's Twitter account here for many in the market here this week. Okay. All right, so hopefully that sheds gives you some of the way I'm looking at things, some of the thoughts here on what's going on out there, and hopefully here this afternoon we get a signal to go jump into Verizon. We'll see. I'm not adverse to playing a bullish signal. I'm not adverse to playing a bearish signal. I will play whatever signals come into play, here, and we'll look to run with them. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.